All right, everyone, a very, very, very good evening to each and every one of you who is attending today's third live streaming session. How is everyone doing today? I hope everyone is having a fabulous day going on with Monday approaching to the end and with the subsequent approaching of Christmas Eve and Christmas. I wish each and every one of you a very advanced and a very happy and prosperous Christmas as well as a happy new year. So let us start with today's third live streaming session, right? Let me start the session by asking each and every one of you, how are you doing today? I hope your day is going phenomenal. I'm very excited for all of you to be a part of this live stream session where I would be talking about trading logic, correct? So we would be diving deeper into understanding the intricacies of trading logic, all right? So let me start the session officially by giving a quick introduction about myself. I am Harsh. I have 8 years of trading experience in the financial markets. I have been trading the forex markets, the commodity markets like oil, gold, silver, as well as the US based indices, correct? Like the S&P 500, the Dow Jones 100, as well as the S&P 500, correct? Sorry, S&P 500, Dow Jones 30, and the Nasdaq 100. I am more of a technical trader where I specialize in technical analysis such as supply demand, price action, order flow analysis, swing analysis, wave analysis, and Fibonacci retracement analysis. When it comes to the field of technical analysis, the field is quite vast and expansive, but the categories that I had mentioned before are the ones that I focus on. I have been blessed to be trained and to be mentored by people who used to work as flow traders on the Chicago Mercantile Exchange. So based on because of their invaluable knowledge and experience, I'm very grateful for the opportunity that I have garnered by being mentored by them. I have also been successful in handling $25 million worth of portfolio. And on top of that, I've also been able to generate a consistent 30 to 35% profitability on an annual basis. So here we at Dolphin Markets, we are making sure to provide you with valuable content in terms of analysis, hot stock recommendations, as well as education. So currently, this being today's third live streaming session, we would be focusing on the education content. So I hope every one of you are ready. Let me know in the chat box, how excited are you for today's third live streaming session? How excited are you? Let me know in the comment box below. All right, so let us start officially our third live streaming session. And this is where we would be initially starting with the previous session, right? Because it's very important to understand how well people have been, attending our live streaming sessions, as well as how many people are taking action. Remember, we had given you certain assignments based on the previous course, and I want to know how many of you have done the assignments. Let me know in the chat box and let me know how many people have done and how many people have not done. All right, so quickly let me know your answers. You need to understand that the assignments that I'm giving is for your betterment, right? It is not for me, it is for you. So for those who have done their assignments, first assignment was identifying your initial intentions or aspirations, correct? Second was listening to the course, to the live, to the video again and again, so that you can instill more positive thoughts, and every time you re-listen to the video, you can learn something new. And third, I had told you to go look yourself into the mirror and adjust your mindset, because it is the mindset that determines your success when it comes to the financial market. So, how many of you have done the assignment? Let me know in the chat box. All right. And how many of you have not? That is not acceptable. I want you to do your assignment, right? It is only for your betterment. You have to understand that it is only by solving the fundamental problems that we can ensure a smooth path to finance and future well-being, right? So people, please make note of this, and we are going to have a quick recap of what we had done in course number one. So how many of you are ready and excited to have a recap of what we had discussed previously? So we had been talking about the basics of trading logic, correct? So we had been talking in terms where we had named our session as logic. Remember, we are talking about trading logic. So it all boils down to logical buying and logical selling. But because we are focusing on our elite members, we will be naming the session as logical buying and logical selling elite class, right? I hope every one of you who are attending this session consider themselves to be elite, correct? What do you mean by elite? Elite means being the top, right? The top 1% of whichever category or whichever work that you are currently progressing in, correct? So we are going to be the elite people, right? And elite people will be comprising of the elite class. So moving forward, I had asked you this important question in terms of, if you could multiply your assets by 10 times, would that align with your dreams? Many people had said, yes, that is fantastic, that is fabulous. So we had a quite long discussion based on this particular concept, and it all boils down to your initial intention, correct? Then we had talked about trading logic, where basically trading logic is bifurcated into two components, correct? The first component being psychological learning. It all starts in the mind before you can convert it into physicality. It all starts mental, correct? So we had talked about the psychological learning, and the second component is going to be based on implementation based learning. Once your mindset is clear and is structured properly, all you have to do is find people who have already achieved success in whatever field you want to get into. Since we are talking about the financial markets, we will be focusing on our performance. And if we at Dolphin Markets, if Harsh has been providing you with valuable content, especially the hot stock recommendations, which have been quite profitable, all you will have to do is, follow our implementations and see the profits coming. So we had talked a lot about trading logic, where we had talked a good amount of info based on psychological learning as well as implementation based learning. Then we had asked you very simple yet very important and deep questions, right? Why do you want to make money in the markets, and for whom do you want to make money? We had received various answers where people were saying, we want to make money to get rich, we want to make money to be to be a celebrity, we wanted to make money to get attention, we want to make money for our family. So there are many people with different answers, and each answer is correct, right, depending upon their personalities. So we had dwelled into these, and we had informed that everyone should be writing down their goals, right, and should be remembering their initial intentions. It sounds simple, it sounds kiddish, but it is not at all. It has a lot of value, and as and how you start implementing it, you will see the benefits of this, correct? We had informed that with people and their initial intentions, many people had different aspirations and intentions, but when it came to the overall crux of understanding what exactly wealth is merely a means to achieve the end goal. The end goal will never be wealth. it will always be happiness and fulfillment. How many of you agree with this particular quote that I have just mentioned? So wealth is always going to be a medium of transfer, right? The more money you have, the more happiness, the more fulfillment that you can achieve, right? Isn't that true? Let me know in the comment box, correct? Then we talked about people being bullied, right? When it comes to the financial markets, many people who enter the markets are losing money and they feel that they are being bullied. They are giving their funds or their capital or their trading account to these big banks and institutions, whether it could be based on policy, whether it could be an institution who is taking the funds, or whether it was a main fund. So we had delved deep into the reason for why people feel that they are being bullied, and we had talked a lot. We had also mentioned that many people are successful in other fields of their careers, but when it sorry when it comes to the financial markets, they struggle. Isn't this true for most people? Everyone starts in the financial markets with a certain aspiration, with a with a certain initial intention, but as and how time progresses, things start to falter, things start to diverge, and that could be a reason why people are not clear exactly what their initial intention is, right? So we had discussed the issues when it comes to the initial and the reasons or the issues that are creating the problem in the first place, which we had talked about. First point is buying too hasty. Everyone entering into the markets to make quick money, right? And that is not how it works. Selling too greedily. People holding on to trades and waiting to generate more profits, right? But that also comes along with a lot of volatility and time that is gone. So people have to, wait for the entire fluctuations to take place, and they are not prepared mentally for it, correct? Then we had talked about the third point, which was hesitating to cut losses. We had given the example of people who are, they go to the doctor when they're very, when their illness is very small. And some people, they don't go to the doctor unless and until something severe takes place, correct? So when a loss needs to be taken, people should be willing to take the loss and not let the losses run with the hope that the markets can reverse. It is very, disastrous and self-destructible, right? Then fourth, we had talked about holding on to many different stocks, basically too much of diversification. So with people based in our category of traders, right? The retail investors who hold accounts between a couple of thousand rupees to 30 crores fall under the retail investor or retail trader category. And for them, it is advisable that to not hold more than five trades, correct? I hope people are understanding, because it is crucial to understand that yes, diversification is important, but over diversification is also not good. So we had talked all in detail, and we had a very good discussion. Then how we could restrain ourselves during the trading process, right? People think that it is basically about controlling their actions or controlling their greed and fear. But many people said yes, it is about controlling our actions and controlling greed and fear, though it is true to a certain extent. But you have to understand that the main constraint that constrains us is our initial intention. We need to be clear about our initial intentions. What is the purpose of us achieving profits in the market? For why do we want to make money in the markets, and for whom do we need to make money? Your initial intentions need to be very clear, correct? And then we had provided you with the assignments. So I hope everyone has got a clear understanding in terms of what we had discussed in course number one, correct? Now let me quickly go and show you course, our main course for today, right? So how many of you are excited for today's course session, right? Give me a minute and let me just quickly put on the PPT, all right? So moving on to course number two, let us start with diving deeper into what exactly is, to understand trading logic at a deeper level, correct? So, how many of you are willing to learn and understand, and how many of you are excited for today's third live streaming session? Remember, we just recently had a recap of course number one, and now we would be focusing on course number two. Like I had mentioned already in a couple of minutes before, only by solving our fundamental problems can we ensure a smooth path to future wealth. How many of you agree with this particular term? Let me know in the comment box. All right. All right, so now moving forward, we would be talking about, delving into the topic of enemies in the financial markets, correct? Now, how many of you have come across this particular term, or how many people consider that you have enemies in the financial markets? Let me know, all right? So I'm sure people will be saying, yes, Harsh, there are many enemies in the financial markets, and we do have come across, where we face or where we feel that our money is being taken by, people who are XYZ. But yes, when you talk about people having enemies in the financial markets, that is what the people are thinking about. So moving forward, correct? So when you talk about enemies in the financial markets, whom do you generally consider enemies to be? It's going to be the institutions, correct? Am I right? If I'm right, let me know in the chat box, correct? So when we think about institutions, we think about they are there so that they can take our money, they can, make profits based on our losses, and we consider them to be our enemies. But you have to understand that not all institutions are profitable. On the contrary, only a very few institutions are able to make money consistently and are profitable. All right. I hope everyone understands this point. It is very important to understand. Now, since very few institutional institutions are able to generate profit, you need to understand that it is only a matter of, your trading logic that needs to be subjugated, right, to the right corrections that are required. So when we are entering the markets, we have to understand that we need to be aware of our strengths and our weaknesses. How many people are understanding this point? How many people understand by the terms strengths and weaknesses? All right. Since we are in the retail investor segment, we would be calling ourselves as small to medium term traders. All right. Does that sound good? So, when entering the markets, let me know. We must be clear about our strengths and weaknesses. So, what do you mean by strengths and what do you mean by weaknesses? All right, so strengths are something that will help us to benefit, weaknesses are something that needs to be conquered. All right, now you need to understand that since we need to be aware of our strengths and of our weaknesses, we also need to understand that we need to utilize our strengths, because those are the positive points that we can work upon. Correct? Now, let me ask you the next important two questions. All right. What do you think? Question number one. What do you think is the biggest strength of small to medium term traders? If you know the answer, let me know in the chat box. If you know, you can write yes. And if you do not know, you can write no. All right, in the chat box. Make sure that we are having a good amount of interaction, because your reciprocation, your opinions can make me understand and can gauge how well our community is being able to understand as a whole. Correct? Does that sound good? All right. So, anyone who has the answer for the first question? All right, no problem. But before I give you the answer for the first question, let me ask you the second question. Do you think your losses are caused by these enemies? Like we had talked about enemies in terms of institutional investors, do you think your losses are caused by these enemies? If you think yes, write down in the chat box yes. If you think no, then write down no. All right. All right, everyone has answered. Some are writing yes, some are writing no. So, are you ready for the answer? Well, you would be, flabbergasted, but in reality, we are responsible for our losses. Losses are due to ourselves. It is not about people thinking that institutions are the reason why people are losing funds. It is not the reason at all. The main reason underlying for us to lose money in the markets is ourselves. No one tells us to lose money in the markets. We ourselves give the funds, give our money to the markets voluntarily. How many of you are understanding this crucial and important point, right? If you do understand, let me know in the chat box. You can write yes, you can write yes, Harsh, we have understood. You can write whatever you want, but I would love to have your reciprocation. Rocky is saying yes. Hello, Rocky. I hope you're having a great day. And thanks for joining us again for our third live streaming session. It is always a pleasant, it's always pleasant to have you on board during our live streaming sessions. So, with this point to be considered, you have to understand that though we consider the institutions to be our enemies, our biggest enemy is our own mindset, right? So we need to be clear in terms of understanding our strengths and understanding our weaknesses, right? Now, coming back to the first question, right? Since I had not answered, I hope people remember that the first question was also remaining, correct? So, what do you think is the biggest strength of small to medium term traders? Any answers? Any guesses? So the answer is going to be flexibility. All right, flexibility is going to be our biggest strength when it comes to small and medium term traders. Now, small boats turn easily, correct? That's what I have written in the PowerPoint. What do you mean by small boats turn easily? How many of you have been on a yacht or have been on a cruise ship or have been in a ferry or a small speedboat? Correct. For most of the people who have experienced some kind of water activity in a vessel like a ship, a boat, a speedboat, a jet ski, or even a cruise ship, you need to understand that the boats that are small can easily maneuver, right? You have seen all those speedboats that are able to take sharp turns and corners, while the big ships, right, like the cruise liners or the oil tankers, they take a lot of time to shift, correct? They are not flexible. So similarly, when it comes to the financial markets, we as retail investors and traders are like small boats. We have the power of flexibility, correct? But when it comes to the institutions, yes, the institutions have a lot of funds. They can move the market in one direction and they can keep taking the prices up. But because of the sheer size of funds that they have, it is very hard for them to find a counterparty. Remember, the market works based on transactions, right? You need to have a buyer and you need to have a seller for a transaction. With the institutions which are playing, right, they have so much of funds and so much of liquidity that when the prices move for them, it is hard to find a counterparty. And that is the reason why we should be focusing on our strength, and that is flexibility. How many of you are able to understand this question? So we have to utilize our strengths, right, when it comes in terms of small to medium term traders. We can participate in multiple hot stocks. When it comes to an institution, because of the sheer size of moving prices for one particular stock, they need a lot of investment. But we as traders can also have the flexibility of taking part or taking trades in multiple hot stocks. And secondly, we can trade in waves or in ranges, correct? like I had informed, it is hard for a financial institution to find a counterparty because of the sheer size of the liquidity that they possess. But we, being small and small traders or retail traders, we have the flexibility of entering in multiple stocks and entering either the markets are trending to the to the upwards direction or downwards, whether they are being bullish or bearish or sideways. For us retail traders, it does not make a difference. And these are the two major strengths that we as small to medium term traders possess. Does that sound good? Are you understanding? If you are agreeing with me, let me know in the chat box by saying yes or whatever you want to write. But make sure that you're keeping on the interaction going on, correct? So these are the major two strengths that we should be focusing on, correct? Where we have the flexibility to enter, to close, to add, to reduce positions. Now you need to understand that sorry, remember, when it comes to trading, trading is like any other tool. We must be clear in terms of when to enter, when to add trades, when to reduce trades, and when to close positions, right? Unlike any other market, this market also holds the same truth. Right now, you have to understand that many of my friends, they come to me, and because since they know that I am an analyst, they ask for trade recommendations. All right, and being my friends, I let them know as well. But sometimes when I provide them with a trade recommendation, sometimes their cost price is better than my cost price, and sometimes their target prices are higher than my target prices. So many times I've observed that they are able to make much more profits than I am making when I am the one who's providing them with the hot stock recommendations, right? It is all a matter of probability. How many of you agree with this particular point? All right. So I discuss my strategies with my friends. I let them know which trades to enter, which trades I am taking, and I have been able to show them that we are, making returns of more than 120%, right? How many of you would love to make these kind of returns? Let me know in the chat box. Rocky is saying yes, yes. Thank you, Rocky. Your interaction means a lot. Thank you very much. So, just following my strategies, people have been able to make 120% returns or even higher, right? Based on probability in terms of people making more money, by entering at a better price and closing at a higher price. All right, now coming on to the next point, which was if people are making money based on a return that I have been able to generate, I also ask them that how much are you eventually making? So some of them are saying that Harsh, we are not making more than 30 or 40%. And I am like, but am I not providing you with all the recommendations that shall be making you a strong and a significant profit return of 120%? They say to me that yes, Harsh, we are aware that you have told us and you have shown us that you are able to make 120%, but we also follow other people. How many of you are following or having similar reactions to what I have said? Many people are following many people, right? So there might be people who are following 10 different analysts. Each analyst will have their own structure, their own methodology, their own reaction in terms of how the markets are functioning. So not every analyst you come across will be the right analyst, right? So when my friends should be making 120%, many do make, but there are others who are not able to make. On the contrary, they are losing. Why are they losing? Can you write down in the chat box and let me know the reason why they are losing? They are losing because they are following many analysts, right? So please be aware, and you need to be very clear, right? It becomes awkward because being your friend, you should have informed me well in advance, but you did not. You decided to follow other people as well, and rather than making more profits, you have reduced your profits. So please be aware that if you trust an analyst, only follow their advice, right? Please be aware, this is a very important point. And how many of you understand this particular point? It is very, very, very important, right? If you do understand, let me know in the comment box below. All right, I have been providing my strategies for the last 3 months, correct? And I have been able to provide, and I have been getting a lot of positive feedback from all my viewers and my clients who have been taking funds. So if you want to take the same recommendations, all you have to do is get back to my team of assistants, and they will provide you with all the details. Does that sound good? If yes, put a thumbs up in the chat box and let me know that yes, Harsh, thank you so much for your information. Now, moving forward, we will be focusing on two major principles. All right, who are ready to learn about the two major principles? You can write down in the chat box and let me know that as well. All right, so principle number one, in order to obtain something, you need to give something in return. How many of you are able to understand the first point? To obtain something, you need to give something in return, correct? So, in terms, let me give you examples. In terms of making money, you have to work hard. Is that correct? In terms of making money in the market, you have to learn how the market functions. If you want to receive something, you have to put in the work or the effort or whatever that is required to attain that goal, right? Nothing is achieved for free. I'm sure everyone would have heard, especially with our parents, telling the same thing, that money doesn't grow on trees. So for you to make or for you to obtain something, you must give something in return. All right, how many people of you agree with me on this particular principle? Let me know in the chat box. Okay, all right. Everyone is saying yes. That is good. And second, but most importantly, birds of a feather flock together. How many of you have heard this principle, previously somewhere else? So, what do you mean by birds of a feather flock together? If you want to become like Warren Buffett, you have to follow his principles, correct? You have to follow his methodologies, you have to follow his strategies. But if you want to make money in the financial markets, like the way I am making, you have to follow my instructions. You have to follow my methodologies. You have to follow my strategy. So that is the overall crux when we talk about birds of a feather flock together. Correct? You have to just make sure that you are attending all my live streaming sessions. We have been proving our we have been proving to the public, we have been proving to our community day after day, week after week, month after month, that it is possible to make great profits in the financial markets, right? And if they can do, so can you. So the moment you start attending my live streaming sessions, you will be clear that yes, money can be achieved, and your luck in terms of making money in the financial markets is just going to increase significantly, right? How many of you want to make great profits in the financial markets? If yes, let me know in the comments box, right? Let me know your answers, and I would love to go through them. So again, very important for those who want to make money. Yes, it is important to be a part of these live streaming sessions and to take part and to have as much of interaction as possible, because with more interaction you can have a clearer perspective, and I can do my best in terms of resolving your queries, right? I can see Dr. Sunita in the house. Hello, good afternoon, good evening. I hope you are having a great day and thank you for joining our live streaming session. Now, moving forward, you have to understand that in terms of the principles that I have mentioned, though they may sound very basic and lame, but they have a lot of weightage, right? When you start to think about them at a deeper level. How many of you are agreeing with me? If you agree with me, let me know in the comment box, all right? So, coming to the questions which we would be having for you, there is a very important question that I need to ask our viewers, right? What do you think causes the stock prices to rise? Anyone who would want to answer this particular question, what do you think causes stock prices to rise? Let me know your reactions or your answers. Yes, Dr. Sunita is writing, all of us wants to make money. Who doesn't want to make money, right? Each and every one of us who are attending this particular or any live streaming session is coming with the main objective of how to make money, and that is exactly what we will be providing you during our live streaming sessions, correct? So Rocky is writing demand. Rocky, that is a very good answer. Very good answer, right? So when people think about what causes stock prices to move, people generally consider it could be either supply or demand, or it could be, some positive news impact. Am I right? Do you think these could be some of the reasons why people think that the stock prices are rising? So you're not wrong, Rocky. You are correct. But there are factors which are bigger than demand, supply, positive news. Though all the mentioned factors are important, but there are even more important factors, right? Any guesses in terms of what could be the most important factor which causes stock prices to rise? All right, so the answer is good. Okay, so Dr. Sunita is writing imbalance, demand, and supply. Yes, you are correct, but you are not absolutely correct. So, though you have mentioned the points which are credible, but there is more important, or there is something that is much more of high importance than all the other concepts that people are mentioning. But everyone, good job for all your answers. You are learning, and that is good. So your points are valid, but I need something which is much more important. So let me give it to you, right? So in terms of, the main thing that causes the stock prices to rise is going to be increased buying and reducing selling. All right, let me emphasize on it again. Increasing buying and reducing selling. All right, now with this concept, whether it is traders, whether it is, institutions, whether it is brokerage research firms, all of this use this particular concept, right? Which is nothing but increasing buying and reducing selling, correct? So when I realized that trading is indeed like this, right? When it comes to increased buying and reducing selling, I feel confident as well as greedy when the prices are rising and my greed is reduced the moment, or I control my greed when selling decreases. Correct? I hope people have understood, because when prices are rising, generally the term of greed and fear kicks in, right? So my greed and fear increases when buying rises, and I get my greed in control when selling decreases, right? If I fail to do so, I will repent for not achieving it, right? How many of you are able to understand? It is important to be aware that these terminologies, though we had talked about supply, demand, price action, news events, which can be important factors when it comes to markets, rising, but the most important crux is increasing buying and reducing selling. How many of you have understood, right? You can always write down in the chat box and let me know your answers, correct? Now, moving forward, so you have to be aware that whenever you're going to be trading, right? Whenever you are going to be trading, you need to review your trades on a daily basis, correct? Focusing more on psychological improvements, such as understanding why you feel fear or why do you feel greed in the markets. Remember, when it comes to price action, whether it comes to indicators, strategies, using those terminologies and getting acquainted to those are much more simpler, right? But the main focus should always be based on the psychological impacts that take place in the mind when you are into trading. How many of you agree with this particular quote that I have mentioned? Whenever you trade, do you need to review your trades on a daily basis? Many people don't even review their trades. They take a trade and they forget about it. That is not how trading is done. You need to review your trades on a daily basis, and you need to focus on the psychological improvements, right? Such as understanding why you feel fear and why you feel greed. Remember, though this might sound very basic and you know elementary, it still has a lot of value. People in the financial markets, they have a tendency to jump, from one train to the other, or we call it as, monkeys swinging between branches. So from one swing, they go on to the next, thinking that they can be making money. But eventually, we have been analyzing and we are aware, that how people think when they enter into the markets, how people think the moment they start trading, and how people think the moment they have spent good time in trading. And we have been understanding that it's less to do with the technical aspects, the fundamental aspects, and it is more to do with the psychological aspects, right? How many of you are understanding this particular point that I have discussed as of now? If yes, let me know in terms of the comment. Let me know in the comment box, right? And I would love to know your answers for this particular quote that I have talked about. So people are saying, yes, Harsh, we have understood. Remember, it might sound simple, but it is much, much more important in terms of understanding that, yes, though technicals and fundamentals are important, but it is much more important in terms of getting a clearer perspective from a psychological output, right? Because only if we can tune and attain our purest and truest initial intentions, can we have a clearer structure in terms of why we are trading, in terms of whom we want to trade for, and what is the ultimate reason for trading, whether it is wealth, whether it is family, whether it is attention, whether it is fame, whether it is glory. It could be different for different people, but that is how you would be getting a clearer perspective into understanding why truly one is entering into the financial markets. And we have been showing you on a consistent basis, based on the last 3 months, that if we have been consistently able to generate profits, um, consistent profits, right? On a regular interval. If we can do it at Dolphin Markets, if Harsh can do it from Dolphin Markets, so can you. So please make sure to keep attending our live streaming sessions. We have been showing you that yes, it is possible to make money in the markets, and it is possible to make money consistently. So, how many of you would be becoming a part of Dolphin Markets? How many of you would be subscribing to Harsha's live streaming sessions? Let me know in the comment box. All right. It is very important to know, because this is how I would be understanding the responses of our community members and getting a clearer idea and a clearer intention of the reasons, of the necessities, and how people are, or how willing the people are in terms of joining our live streaming sessions, because we are prematurely focused in terms of generating wealth for our viewers, right? We have been showing it consistently in the past, and we will be showing it consistently in the future as well. So for those of you who want to be a part of Dolphin Markets, make sure to be a part and subscribe to Harsha's live streaming session. So let me just give you a quick review of the entire session that we have done. I am pretty sure many of you would have been attending our live streaming sessions later, though it is not acceptable, but I want to make sure that I can provide you with all the value for each and every one of our viewers. So let me just give you a quick review in terms of what we had talked about, right? We have been focusing on the last two sessions purely based from trading logic, right? What is the rationale that people are entering into the markets? Why people are having a reason of entering into the markets, right? Whether it is to make profits, whether it is to buy a particular product, whether it is to achieve a particular reputation. Everyone has different reasons, different needs, correct? And that is what we had been talking to, right? And why it is important to understand in terms of solving our fundamental problems, right? Because it is only by solving our fundamental problems that we can ensure a path to future wealth. Very simple but very important points which need to be, got into attention. How many of you are able to understand all the slides that I have talked to? If yes, you have understood, let me know in the comment box. All right. All right, so now moving on quickly, just let me give you a quick recap for everyone who is late or for everyone who wants to again have a quick review with the master. I will be having a quick review. All right, does that sound good? All right, so let me go. So we had talked about enemies in the financial markets, right? When we talk about enemies, everyone considers enemies to be in the financial markets, right? So everyone considers an enemy to be either a bank or a financial institution or a hedge fund who is sitting on the opposite side so that they can take money from us, right? How many of you have who have thought about this or who have thought something similar to this when they had started their journey in trading? Let me know the answers below. You wouldn't believe, but I too, when I had started my trading journey, I was also in a similar, hole where I was like thinking whether, is it really someone who's sitting on the other side in terms of taking funds and taking capital from my trading account for them? So, yes, everyone does have this intuition in their brain that there are enemies in the market, such as institutional investors, right? But people need to be aware that institutional investors are not always right in the markets, and not sorry, and not all institutional investors are making money, right? On the contrary, many are either at break even or losing. Very few institutional investors are actually making money in the financial markets, right? So when we called ourselves as small to medium term traders, right? Because of the funds that we possess, we are termed as small to medium term investors, and how we can utilize our strengths and weaknesses. We talked about the strengths, we talked about the weaknesses, and we also evaluated certain strengths that we should be capable of, right? So what were the strengths that we were focusing on? But before moving on to the strength, the two important questions that we had asked, whether what do you think is the biggest strength of small to medium term traders, and do you think your losses are caused by those enemies? So everyone who had answered for question number two, everyone is saying that yes, enemies are financial institutions and they are the reason for us losing funds or capital when it comes to financial trading. But people, it is so easy to start blaming onto other people when we ourselves are wrong, correct? If you think about it from a psychology perspective, it is us who are the reason for losing funds in the markets. Please be aware that whenever you are placing a trade, no one is forcing you to take a trade. Whenever a trade is being placed by you, You are placing the trade with the greed and fear that arises in the mind, greed of making more money, and feared if the positions are going against your favor. So there are many points that are taken into consideration, and people think that yes, it is easy to blame some other institution and call them as an enemy because it takes the burden off from their shoulders. But when in reality that is not the case, it is us, right? So we had mentioned that the losses are due to ourselves and only by ourselves. No one in the markets are forcing to us to take trades. We are taking trades voluntarily, and majority of us are losing capital voluntarily, correct? So no, it is not the financial institutions who are responsible, but ourselves. We also talked in terms of what could be the biggest strength when it comes to us, the small and retail investors, correct? And I'm sure everyone had been curious to know that yes, it is the power of flexibility. We had talked in terms of how we as small to medium term traders can act as small boats, right? Small boats have the power and the power of flexibility. We can easily improvise and adjust to the market conditions. On the contrary, institutions, yes, they have a lot of funds, they have a lot of capital, but when it comes in terms of moving the markets, they are very capable of moving the markets. But because of the funds and huge liquidity pools, sometimes they do not sometimes, but on the contrary, many a times they have problems in terms of having a counterparty to fill the positions. So it becomes tough for them to fill positions. And that is why we can utilize the power of flexibility to our advantage, right? How can we utilize the power of flexibility? We can enter into multiple hot stocks, not just one or two, or we can enter multiple. When the same position for an institution to be taken, they need even bigger funds to enter, right? Because they need to move the market. So they do not enter in many funds or many stocks. And we are capable of trading in waves or in ranges. So when the markets are moving, when the markets are trending, or when the markets are ranging, we have the power of being flexible in terms of adjusting and acclimatizing to both the market movements, whether trending market movements or ranging. I hope everyone is understanding. This is just a quick recap for people who have joined late, and I'm just repeating the point so that everyone can have a good understanding in terms of what has been discussed, right? I hope everyone is good, and I hope everyone is paying attention, right? If you want to make sure that you are having any doubts or queries, or if you want to take notes, please do so. Whenever you are attending my live streaming sessions, always make sure to sit with a pen and paper so that any doubts, any queries that you can come across, you can write it down in the paper as well. All right, does that sound good? All right, so we are quicker than institutions. When institutions take a lot of time in building up positions because they have to accumulate positions before the market can rally, we, on the other hand, because of the power of flexibility, we can improvise and we can, adjust, and we can be quicker. How many of you agree with this particular point, right? We are quicker than institutions. Now, I had told you in terms of my friends following my trade recommendations because they always come back to me and they are like, Harsh, please inform us or please provide us with more hot stock recommendations. And being my friends, I provide them, right? Because that is what I do. And some of them are even able to make more profits because sometimes they are able to enter at a better price and exit at a higher take profit target. But when I ask them that, have you been able to generate the profitability that I have been able to generate? Some say yes, but many say no, right? So if people are following my strategy, to those of you who are following my strategy, you are aware that you have been able to make a consistent profitability of 120%, right? But when I do ask my friends who have been making money, but they are not informing me about the details, and then they later let me know that, Harsh, we have been following you, but we have made only 30. So I asked them, how is that possible? And the answer they gave me is that because we have been following other traders as well. And this is very important to keep in mind, because if you are following many people, you are following many recommendations from different people who have different personalities, who have different methodologies, who have different strategies. It will all be a big soup, correct? So, very important to keep in mind that if you're trusting an analyst, only follow their advice. The less people you follow, the less and credible people you follow, the better your chances to make much bigger returns in the market. How many of you are understanding this? If you're understanding, let me know in the chat box. All right, good. Now, we had talked about two major principles which were also important. The first major principle being, in order to obtain something, you need to give something in return. I had talked about nothing comes free in this world. Everything needs to have a give and take relationship, correct? How many of you agree with me for this particular point? For everything that works in life or that works in the world is based on a give and take. So if you want to get better in something, you need to work hard for it. Similarly, if you want to get better in trading, you have to start learning about trading. Am I right? If I'm right, let me know in the chat box. So, similarly, make sure that you are following whatever is necessary, right? If you want to be successful, you need to follow people who are successful. Then we talked about the second point, which was birds of a feather flock together, correct? Now, this particular principle suggests that if you want to attain a particular task or to attain a particular goal, you have to follow people who have been successful in that, right? I gave you the example of Warren Buffett. If you want to become like Warren Buffett, you have to follow his methods, his principles. If you want to follow me, Harsh, right, in terms of generating consistent profits, you have to follow my methodologies, you have to follow my principles. It is as simple as that. How many of you have understood this particular point? It is only a matter of time, based on you attending our live streaming sessions consistently, that you will be seeing that you are becoming profitable at a rapid rate, right? All of those who want to be making good money and consistent money in the markets, make sure to follow Harsh, right? Because Harsh has been proving to make returns of 120%, right? How fabulous returns are these? Do you think these returns can be achieved by you? If yes, write down in the chat box. And if no, write down no in the chat box as well. So we had talked about the other main important question when we had a good amount of interaction, and I am thankful for everyone who had provided. So we talked about what was the root cause of stock prices to rise, and people had mentioned supply, demand, whether it is price movement, positive news, but the main concept is based on increasing buying and increasing selling, right? My fear and greed rises when prices increase, and I hold my greed when the selling decreases. So this has been the main concept, and this is what we would be focusing on in the future as well. And last but not the least, whenever you trade, make sure that you are reviewing it on a daily basis and focusing more on the psychological improvements, right? Such as understanding why you feel fear and greed. Trading is simpler. It is understanding and tackling the psychological challenges that are of prior concern. So I hope every one of you have had a great session for today. Yes, I have done a good amount of repetition, and I'm sure everyone who has watched with me till the end, a big congratulations and a big applause to each and everyone who has stayed with me till the end of the session. So I hope my value in terms of providing you for this particular content has been of immense importance as well as value, because I'm sure very few people focus on these terminologies when it comes about the financial markets, correct? So please make sure to attend my first live streaming session, which will be happening tomorrow. And to all of you, I wish you a very Merry Christmas well in advance, right? So stay tuned. My fellow colleague will be continuing with the live streaming session where he will be focusing on his education content. So for those of you who are willing to learn more about the financial markets, do stay tuned, right? And until then, I will see you tomorrow. Bye bye. Namaste. Have a great evening and see you tomorrow. Take care.